Welcome back to Investing Talk podcast.
Today we're looking at Oklo.
And as usual, before we start, please subscribe, like, and comment to this video to support the show.
Yeah, it really helps the algorithm out, so thank you.
It really does. So today we are exploring this really fascinating intersection of two massive paradigm-shifting global trends.
Right. Sitting here in early 2026, it's impossible to ignore.
Exactly. On one side, you have the explosive, almost insatiable energy demands of artificial intelligence. I mean, it feels like every single day there's a new breakthrough requiring just, exponentially more compute power.
And then on the other side, you have the highly controversial but undeniable renaissance of nuclear power.
Yeah, specifically, we are zooming in on Oklo today.
It's essentially the perfect storm of software tech colliding with hard physical infrastructure.
Which is always where things get complicated.
Oh, absolutely. And to really understand what's happening under the surface here, the research we're going over today covers strategic financial analyses, market sentiment reports, and some really deep technical models.
All detailing Oklo's business model, their financials, and this incredibly unique market position they have right now.
Our mission today is to sift through all of this complex data to answer one massive question for you.
Right. Is Oklo a company that is currently generating exactly $0 in operational revenue? Just another speculative tech bubble?
Or is it actually the ultimate picks and shovels play for the ongoing AI boom?
That is the core premise we really need to unpack. Because history tells us that during a gold rush,
the people who reliably make the most money aren't panning in the river.
Right, they are the ones selling the picks and the shovels.
And in the context of our current AI gold rush, the shovel is electricity.
Massive, uninterrupted baseload amounts of it. So our goal is to determine whether Oklo is truly positioned to be the primary supplier of that power, or if the market is just getting way ahead of reality.
Let's transition right into the fundamental segment, because looking at their early 2025 financial reports is honestly like reading a paradox.
It really is. The reality of Oklo right now is stark. They are completely pre-revenue.
$0 coming in from power generation.
Because, quite simply, their commercial reactors do not exist yet. Meanwhile, the operating expenses have skyrocketed 195%.
Up to $36.3 million.
Yeah, and net losses are up 198% to $29.7 million, which actually missed analyst estimates. Management is even guiding that they expect to lose between $65 and $80 million in 2025 alone.
Those numbers, I mean, they would normally send any traditional value investor running for the hills.
Oh, without a doubt.
But that burn rate is really only half the story. The other half is the safety net.
And it is a massive safety net.
Oklo is sitting on approximately $1 billion in cash and marketable securities.
Wow.
Right. And perhaps even more importantly, in an environment where the cost of capital is constantly fluctuating, they have zero significant debt.
I want you, the listener, to just imagine that scenario for a second.
Right.
Imagine running a business with zero sales, burning through tens of millions of dollars a year.
But you still have $1 billion sitting in your checking account to literally build the future.
It sounds like a Silicon Valley fever dream.
Yep.
They also have $306 million in proceeds from their 2024 SPAC merger just sitting there. It's an absolute war chest.
And that war chest fundamentally changes how you have to evaluate their corporate strategy.
How so?
Well, they aren't burning cash just to keep the lights on or pay executive salaries. They are aggressively deploying that capital into immense foundational hurdles that act as barriers to entry for anyone else.
Okay, so they're buying a moat.
Exactly. They are funding complex regulatory milestones, they are quietly acquiring massive strategic sites, and they are funding extensive pre-construction activities at the Idaho National Lab.
So they are essentially buying time and paving a very expensive regulatory runway that competitors simply cannot afford.
Spot on. Which naturally brings us to the next big question.
Right, pivoting over to the technical segment now, what exactly are they building with all that runway?
The answer is Oklo's proprietary technology, the Aurora fast fission reactors.
And we have to clarify, when most people think of nuclear power, they picture those massive, looming concrete cooling towers from the 1970s.
The ones that cost $20 billion and take over a decade to build.
Right. But the Aurora reactors are different. They are small, modular, and designed to produce between 15 and 75 megawatts of power.
What's fascinating here is the competitive moat they are building around the specific physics of this technology.
Because it's not traditional nuclear.
No, unlike traditional light water reactors, which make up almost the entirety of the current global nuclear fleet, Oklo's fast neutron technology utilizes a highly efficient closed-loop fuel cycle.
So the physics of fast neutrons allow the reactor to extract significantly more energy from the fuel source compared to legacy systems.
Yes, it's a massive leap forward in fuel efficiency, which obviously translates directly to unit economics.
And the economic implications are profound for a power company.
It drastically lowers their long-term fuel costs. Plus, it provides an inherent safety profile that relies on natural physics.
Like thermal expansion and gravity.
Exactly, rather than complex active pumping systems that can fail during a power outage.
And while fast fission sounds like, I don't know, experimental science fiction, the research emphasizes a critical detail here.
It actually has over 400 reactor years of historical precedent.
Right. We've been running fast reactors in research capacities for decades. It's advanced, yes, but is built on a foundation of proven physics, not untested theory.
And this creates a stark differentiation from their competitors in the small modular reactor, or SMR space.
Yeah, the data specifically highlights Nasdaq, which is arguably one of Oklo's biggest rivals.
And they are struggling right now.
Big time. While Oklo is flush with cash, Nasdaq has recently faced very public insider selling and a wave of analyst downgrades.
Meanwhile, Oklo isn't just sitting on its hands. They are actively acquiring other companies to widen their moat.
It looks like a very aggressive horizontal integration strategy.
In 2025, they completed the Nuclear Regulatory Commission Phase 1 pre-application, which is a massive bureaucratic hurdle.
But beyond the reactors themselves, they formed a joint venture with a company called Nucleo.
Specifically to handle fuel fabrication.
And they also acquired Atomic Alchemy in March 2025. I saw that in the reports, and it really stood out to me. Why would a power company buy a radioisotope production company?
It is a brilliant play for diversification. There is currently a massive global shortage of critical medical and industrial radioisotopes.
These are materials used in everything from cancer treatments to industrial scanning, right?
Yes. So by acquiring Atomic Alchemy, Oklo can potentially harvest these valuable isotopes from their reactor processes and sell them to the medical industry.
Long before they ever managed to sell a single megawatt of electricity to the grid.
Exactly. It gives them a highly lucrative near-term revenue stream that completely hedges their bets against potential delays in the power sector.
So they are building this massive technological moat with radioisotopes, fuel fabrication, and highly efficient reactors. But all the brilliant tech in the world doesn't matter if nobody wants to buy the product.
Which is the perfect time to look at their customer pipeline.
Because without locked-in buyers, this billion-dollar war chest is just funding the world's most expensive science experiment.
Right. And the customer pipeline is where the overarching AI thesis truly crystallizes. Oklo currently boasts a massive 15-gigawatt order book.
15 gigawatts is an astonishing amount of power, and that order book features locked-in agreements with tech giants like Meta and Switch.
On top of that formal 15 gigawatts, they have an additional 14-gigawatt pipeline from other hyperscalers.
The massive cloud providers like Amazon, Google, and Microsoft, the companies physically building the backbone of the AI revolution.
If you connect this to the bigger macro picture, you have to look at the environment these tech giants are operating in.
The White House recently emphasized a $9.7 trillion portfolio focusing aggressively on domestic AI infrastructure and energy independence.
$9.7 trillion. Regardless of the politics of any given administration, that is a staggering amount of capital signaling a united national priority.
AI data centers have an absolutely unquenchable thirst for power. But it's not just about the volume of power, is it?
No, it is about the quality of it. They need baseload power. It has to be always on, without interruption, regardless of the weather.
Right. Wind and solar are phenomenal technologies, but they are inherently intermittent. You cannot run a billion-dollar AI training cluster on a grid that dips when a cloud rolls over.
Furthermore, these tech giants have made incredibly strict, highly publicized carbon-neutral pledges to their shareholders.
So they can't just go build a coal plant.
Exactly. That combination of constraints leaves very few options. Nuclear is essentially the only commercial technology that currently provides always-on, carbon-free, baseload power at the extreme scale these hyperscalers require.
That is the fundamental bedrock of the Oklo investment thesis right there. The details on the Meta deal specifically illustrate how real this is getting.
It's a massive prepay agreement for 1.2 gigawatts.
And it's not just a vague memorandum of understanding. It includes 206 acres of land acquired directly from the Department of Energy in Ohio.
They're actually slated to begin site work this year. in 2026.
Ohio is critical because it's becoming a major corridor for data center development.
The geography is highly intentional. They are positioning the power generation physically adjacent to the future data processing hubs.
To minimize transmission loss and bypass grid congestion entirely.
Yes, so let's run the payoff projections from the financial models.
Yeah.
Oklo is targeting commercialization post-2028.
Okay.
If they actually hit their operational targets, by 2030, they project having about 240 megawatts operational.
Which is just a tiny fraction of their overall 15-gigawatt order book. But the underlying economics on just that initial 240 megawatts are incredibly compelling.
The math suggests that 240 megawatts could generate somewhere between $300 and $400 million annually.
Assuming negotiated rates of $150 to $200 per megawatt hour, that implies incredibly lucrative 20% profit margins.
It really highlights how violently the financial narrative could flip here.
They go from zero revenue and a high cash burn today to potentially hundreds of millions in high-margin contracted recurring revenue in just a few short years.
And that revenue is entirely backed by the deepest pockets in the technology industry. The counterparty risk is practically zero when your customer is Meta or Google.
Let's transition over to the market sentiment segment. How is the broader market actually reacting to all of this right now in early 2026?
If you're looking at your portfolio and just glancing at the mainstream financial headlines, the overall news sentiment for Oklo is broadly categorized as neutral.
But if you look beneath the surface of the headlines, the options market is telling a very different, much more aggressive story.
The data reports an absolute options frenzy and points to smart money betting big.
If you're watching this market, it forces you to ask, who knows something the rest of us don't? Smart money refers to the institutional investors, the hedge funds, the massive asset managers who place highly calculated bets.
And their behavior is revealing. Despite a recent noticeable sell-off in the retail stock price, this options activity signals major institutional accumulation.
Institutions often use options to manage their downside risk while maintaining exposure to massive asymmetric upside.
Right, they're actively using the retail volatility and the sell-off to quietly build massive positions, anticipating future commercial catalysts.
The traditional equity analysts are also weighing in with a mixed but generally positive view. Barclays recently maintained an overweight rating on Oklo.
Essentially signaling they expect the stock to outperform the broader market.
However, they did significantly cut their price target from $146 down to $82 in late February 2026.
That price target cut reflects a sobering reality check regarding the timeline and the ongoing cash burn.
But maintaining the overweight rating is the key takeaway there.
It shows the institutional analysts still believe fundamentally in the underlying thesis and the eventual payoff, even if the road to get there is bumpier than initially hoped.
It's also entirely impossible to talk about Oklo sentiment without talking about the people backing it. We are talking about heavy-hitting venture backing from absolute Silicon Valley royalty.
Sam Altman is involved through his fund Hydrazine Capital.
You have Peter Thiel, Dustin Moskovitz, Ron Conway.
These are individuals who have built their multi-billion-dollar fortunes by identifying massive technological paradigm shifts years before the broader market understands them.
Their presence on the capitalization table provides a significant psychological floor for other investors. It validates the ambition of the project.
And wherever Sam Altman is involved right now, rumors regarding OpenAI inevitably follow.
Yeah, the reports address a highly speculative, though currently unconfirmed, rumor of a direct OpenAI energy deal with Oklo.
It is a very logical leap for the market to make, given Altman's deep ties to both entities. But the analysis rightly points out the massive potential conflict of interest there.
Altman would have to navigate corporate governance and fiduciary duties very carefully to execute a deal like that.
Still, in a market driven by AI momentum, the mere rumor of an OpenAI partnership adds incredible fuel to the speculative fire.
If you are actively watching this story unfold, there is a massive catalyst calendar to keep an eye on. First up are the Q1 2026 earnings.
That will be a crucial health check on that cash burn we discussed earlier.
The market needs to see if management is maintaining discipline and staying within that $65 to $80 million loss guidance.
Because if the cash burn accelerates too quickly due to unforeseen engineering challenges, that billion-dollar safety net starts to look a lot smaller very fast.
But the truly highly anticipated date on the calendar is July 4th, 2026. That is the target for the Idaho National Lab Aurora demonstration reactor to actually reach criticality.
Hitting that specific milestone on schedule would be a massive de-risking event for the entire company.
Criticality is basically the moment the reactor wakes up, right?
Exactly. It achieves a self-sustaining chain reaction, meaning it goes from being a highly engineered, very expensive metal tube to an actual functioning power source.
It proves the physics work outside of a computer simulation.
Now let's look at the risk factors.
Yes, let's pivot to the risks section, because we've painted a very optimistic picture so far, but this is by no means a guaranteed home run.
The risks are substantial, and the biggest one by far is regulatory friction. We are dealing with the Nuclear Regulatory Commission, the NRC.
This is an agency tasked with ensuring the absolute safety of domestic nuclear technology. They do not move fast, they do not cut corners, and frankly, they aren't used to evaluating agile startups.
The historical context is vital here. The NRC was built over decades to regulate massive, gigawatt-scale light water reactors.
So their entire regulatory framework is fundamentally misaligned with Oklo's business model of deploying small, modular, fast-fission reactors.
Exactly. Oklo isn't just trying to build a new reactor. They're effectively forcing the federal government to build an entirely new regulatory paradigm.
Delays in that kind of bureaucratic environment aren't just possible, they are almost expected. Which raises an important question. How long can Oklo survive if those regulatory delays happen?
If the NRC demands redesigns or more testing, that critical 2028 commercialization timeline could easily be pushed back into the 2030s.
That is the multi-million-dollar question keeping investors awake. While the $1 billion cash pile provides a comfortable 2 to 3 year buffer, Oklo is operating under incredibly high market expectations with extremely limited near-term fundamentals.
If you were an investor today, you are buying a story and a deeply discounted future cash flow projection.
And if that timeline extends by 3 or 4 years, the present value of those future cash flows absolutely plummets.
Furthermore, competition is fierce. Oklo is not the only company trying to solve the data center power crisis.
Other advanced nuclear startups, geothermal companies, and massive utility conglomerates are all vying for the exact same hyperscaler contracts.
And the market has already priced a lot of this volatility into Oklo stock. It is highly susceptible to wild swings based on macroeconomic news, interest rate changes, or even unverified rumors.
Okay, bringing it all together, what is the final verdict based on the financial and technical data today?
The overarching conclusion from the analysis is actually quite striking. Despite the massive regulatory risks and the zero revenue reality, the research assigns Oklo an 8 out of 10 bullish score.
An 8 out of 10. The consensus frames it as a multi-year hold, looking specifically toward that crucial 2028 commercialization window.
The logic driving that bullishness is that the potential upside of solving the AI energy bottleneck simply dwarfs the near-term volatility.
If Oklo can successfully navigate the labyrinth of the NRC, and if they can convert even a fraction of that 15-gigawatt pipeline into fully operational commercial reactors, the data suggests the company could easily triple its valuation.
It would transition from being a pre-revenue, highly speculative venture bet into a foundational infrastructure leader for the entire global AI era.
It is a high-wire act, without a doubt, but it's a high-wire act performed with a billion-dollar safety net, heading toward a destination that the largest, most powerful technology companies in the world are absolutely desperate to reach.
Before we wrap up, there's a final provocative thought from the research to mull over.
Yeah, we've spent this entire episode talking about AI, energy demand, and the incredible efficiency of fast fission reactors. But we haven't explicitly named the fuel source that Oklo intends to use to achieve this efficiency.
The specific fuel they are targeting is legacy nuclear waste.
For over half a century, the byproducts of the nuclear age have been a seemingly insurmountable environmental and political nightmare. No one wanted it in their backyard, and billions of dollars have been spent trying to figure out how to bury it deep underground.
But now, if Oklo successfully scales these fast fission reactors that actually consume and recycle that legacy waste to power the grid,
it creates an incredible, almost poetic, historical irony.
it completely flips the narrative.
Could the explosive, aggressively energy-hungry AI boom something that is constantly criticized by environmentalists for its massive carbon footprint paradoxically become the exact economic catalyst that finally forces us to clean up the 20th century's radioactive footprint?
It's a wild thought to consider.
It really is. Thank you for joining us on Investing Talk podcast today. Remember to subscribe, like, and comment to support the channel. Keep questioning the world around you, and we will catch you next time.